Welcome to Takeaways. My name is Jordan Brooks, Director of Market Analytics with ALN Apartment Data. And this month's ALN newsletter was titled Multifamily Finds Breathing Room, Not a Full Recovery. And this was essentially a look back at the first 6 months of the year and how the multifamily market is performing. In general, I would say that the theme of the newsletter maybe was caveats, in that we mentioned that occupancy trends look positive, absorption looks quite robust relative to sort of the last 5 to 6 years of historical comps. But there are caveats to basically all of the good news. So, positive occupancy trends are real and in place and have been getting a lot of attention recently. But unfortunately, that occupancy improvement is coming more from the supply side than the demand side. So new supply is down considerably, and that's helping kind of add some breathing room for multifamily. Again, net absorption has been quite strong, but nationally, we're down about 15% from the first half of 2025, which was expected coming into the year. The 2025 number ended up being a huge number for net absorption nationally. And so coming into 2026, we did anticipate a little bit of a drawdown, but still a strong result. And that's generally what we've seen. However, the other caveat is that the strong absorption that we've seen is coming alongside massive rent concession numbers. So both in terms of discount availability and average value, we've seen continued growth in those metrics. So coming into the year, the hope was that we could see some reduction in concession availability, and that would allow for some improvement to the rent performance that we've seen over the last few years. Unfortunately, if you look at the start of 2026 to the end of June, we've seen further growth in lease concession availability, about an 8% rise. And again, a lot of that has taken place through what we would consider the stronger leasing portion of the year, sort of that spring to early summer period. And so we really have a short runway now of the next 2 to 3 months to see any reduction in lease concession availability before we get into, the later portion of the year, where just from a seasonality perspective, we would anticipate actually lease concessions to begin rising again through the end of the year into the winter period. And so in general, the theme of the newsletter was not that the sky is falling, but that the good developments that we're seeing, again, particularly on the occupancy front, have created a situation where the early stage of a multifamily recovery has not translated as much as we would have liked in 2026 into maybe a more full, broad-based recovery. And just one last note on that, that translates to the rent side of the equation as well, in that particularly Sunbelt markets and Mountain West markets that have seen large supply gains in recent years, despite fairly positive occupancy and absorption trends, that's not been translating into rent gains because in a lot of cases, again, the concession environment really is not allowing for strong rent growth. And despite occupancy gains, average occupancy remains lower than the sort of traditional equilibrium level for those markets. And so that's made rent growth difficult to capture. The newsletter also goes into the fact that we're seeing some softness arise in the workforce housing segments, Class C and Class D specifically, or sort of older vintage properties, those that were stabilized at least 18 months ago, for example. So not even quote unquote old properties, just not brand new properties. We've seen some softness. So definitely check out the newsletter for details on that. In addition, a lot of these themes are going to be explored in ALN's upcoming ALN's upcoming webinar. That's going to be on August 26th at noon Eastern. So be on the lookout for registration details for that across our social media channels. And then lastly, I'll also be doing the Idaho Economic Forecasting Conference. I'll be speaking at that 9 a.m. local time on August 6th. So check our social media for registration details as well. Other than that, I will see you next month. Thank you.